In today's video, we're going to be using our opening range breakout backtester to test the S&P 500, the Dow Jones, the Nasdaq, and the Russell for its year-to-date performance to find what has been the best opening range breakout setup. You'll find as we go through this video, there's very clearly one index market which has outperformed the other three index markets, and you'll see how you can find that information yourself using our backtester. Now for this exercise, I'm using just 4 symbols here to create our basket of stocks, but you can input up to 100 if you'd like to test a bigger basket or dive individually into each market, which is what we'll do in the second half of this video. Now to get started, I have the SPY, DIA, QQQ, and IWM as the 4 symbols. I'm going to use the 5-minute opening range breakout range to start off, and for our length, I'll select year to date. For our target, I'll select half, and for our stop, I'll select half as well. If I click search, we instantly get the backtest results for what this strategy has returned. We can see the blended win rate up here of 53.75% for both the long trades and the short trades. We get a positive P&L, which tells us the P&L is positive for the strategy, but the graph gives us the full picture of seeing how the beginning periods here were really not all that positive. If we scroll down, we can get an overview information, which is the same information, but a little bit more detail. You can see a breakdown of the long side trade setups, which has been negative, versus the short side trade setups. If you'd like to see more detail, you can see individual trades for everything that's making up this backtest. For example, all 253 trades right down here in the table. Now, if we come back up, we're simply trying to get high-level information very quickly here to figure out what strategy do we want to pay attention to. So to do that, I'll start by testing the half-range target and the half-range stop combination first. We can choose between half or full, and these ranges are simply a reference to, well, how far of a stop and how far of a target are you looking for. If you use this as the opening range, which this was today's 30-minute opening range in the S&P, well, this would be considered the full range. The half range is simply this divided by half, and that's what this middle line is. The levels inside of the range are what make up the stop. Which stop are you going to use? Either the half range or the full range. And the levels outside represent the targets, the half range target and the full range target. Now, if we come back inside of our backtester and we keep the half and half, but we cycle through different ORB ranges first. So next, we go test a 15-minute breakout range. Here we see our numbers become more negative, and if we switch to a 30-minute, the numbers continue to remain more negative. They're nowhere near as green as the 5-minute, and we really didn't even need to scroll that deep to gather that information. So the 5-minute blended seems to be the range worth paying more attention to. What happens if we widen our stop? Right now we have a half-range target and a half-range stop. What if we change this to a full-range stop? Now the numbers have improved. Our short side has jumped up to an 80% win rate with a nearly $20 positive P&L. This is using a 1 share count. And on our long trades, we have a 67-ish% win rate with a positive P&L as well. And we can see that the performance of the strategy has overall been steadily increasing. So this seems to be a nice combination worth diving deeper into, the half-range target and the full-range stop. What happens if we change our target to a full range target as well? Well, there the numbers slip a little bit, at least on the long side. So let's stick with this half range full stop idea and now dive deeper into each one of these 4 markets to see, well, out of these 4 markets, which is contributing most to this overall win rate and this overall strategy P&L, this positive number of $22. I'll start with the S&P 500 first with the SPY ETF. Keep our half range and our full range stop and click search, and instantly we can see our win rate here is 61.54%, but our P&L is negative, and this graph makes it very clear that this strategy is clearly not one of the ones contributing to that really strong performance we saw in the backtest of the basket of stocks. So the S&P is not a symbol I want to dive deeper into. What about the Qs? If we come in and we test the Qs, we can see that the Qs have a positive win rate, 79.37%, positive P&L, 13.71, a steadily rising P&L curve, Both the long and the short side trade setups have some solid performance, and the Qs have been on a nice win streak, and you can also see the average amount of time that each of the trades in this win streak has taken to give you an idea of how quick you need to be to react to some of these trades. So the Qs very clearly have some nice performance here with the half range target and the full range stop. What happens if we again get greedy, increase our target to a full range target? Here we see the long side trades no longer look as attractive, the short side still pretty solid. So with the Qs, we have a nice backtest with the 5-minute breakout range, and really more than the full range target and the full range stop, it's the half range target and the full range stop. So that means we need to have a risk to reward ratio here of risking 2 to try and make 1, and we can use our clever tricks to skew that back in our favor. I'll leave a link to a video which walks you that in more detail. Next up, we can test the Dow. If I click search on the Dow, we see equally strong performance as we saw with the NASDAQ. An 83.64% win rate, a positive strategy P&L, our long side trades perform well, our short side trades perform well. Also, on a win streak, very similar to what we saw inside of the Qs. If we come in and we change our target here to a full range target, here the DIA continues to have its green numbers, continues to still have relatively strong performance, at least compared to what we saw in the Qs and the S&P. The long side, positive win rate, above 50%, positive P&L, and the short side very clearly better with positive P&L and nearly 70% win rate. But this P&L graph also steadily rising. So the Dow, very clearly to me, the index market that stands out. Finally, we can test the Russell here. I'll reverse this back to the half range target, the full range stop. And the Russell, equally strong performance as these other index markets we've discussed. The S&P seems to be the weakest. However, with our long side trade setups here, our P&L slips to negative. It's the short side that's really got the strong performance in the Russell. And if we switch this to a full range target, the long side not really worth playing at all this year, but the short side a little bit better. So across the board here, we've seen the short side setups have been the better of the two. I hope through this video you saw how easy it is to use our backtester to very quickly test a basket of stocks as well as individual markets to try and understand their personalities. Now during live market hours, our live scanner will do all of this backtesting for you and simply tell you what is currently triggering, what range breakout it's triggering, whether it's long or short, what its trade expectancy is, what its P&L is, and what its win rate is. This is all 3-month performance, so you get an idea of how the recent term performance is for each market that's triggering, and you can also sort by these columns to say find all of the places where we currently have a breakout triggering with the highest wins versus losses. However you want to sort this based off of what's most important to you. I hope you found this video useful for those of you that enjoy trading the opening range breakout strategy. To me, from this video, the Dow is the market which very clearly stands out in the sea of the 4 index markets we look at. Take care everyone, good luck trading, and I'll see you in our next update.